Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Tuesday, November 18th. Firstly to the gold futures, and here we see a continuation of the trend to the upside, a candle that's made a higher high and a higher low, a fairly bullish candle. If you recall, for the previous day's trading we were looking for a potential change of trend here with the very small body candle, the indecisive candle, two types of potential Japanese candlestick reversal patterns. One was the tweezers top type pattern, one was the bearish harami, but as always, and as you know, confirmation is required, so we were looking for a lower high and a lower low, so that made the low of that previous candle very important. As the market opened up above the 1185 level of previous support and resistance, the market didn't test anywhere down near that previous low, and the buyers came into the market very solidly to close in a strongly bullish manner up above the Kijun-sen indicator. That suggests that we now have a bullish market in the faster time frames. In the fast time frame, by trading up above the Tenkan-sen and above the Kijun-sen, the pink line suggests a bullish market in the medium term time frame. We also saw the market test to around the 1200 level, a round number, and as expected has held as some resistance for this market. Some price rejection from above there suggests that the buyers will need to be strong enough to test up through there, and if they are, a possibility of the market trading up to around this 1218 level, which coincides with the bottom of the Ichimoku cloud. Now, as we watch this new candle trade, we are seeing the Kijun-sen hold as some support for this market, so some interesting trading coming up. But if we look very closely, we have this close by strong resistance at the round number 1200, but then solid support below the Kijun-sen around the 1185 area, and we've held that support for the past two consecutive days. So I think we just want to be a little bit cautious in this market. Obviously, any breakout to the upside above 1200 will probably find very strong resistance at the Ichimoku cloud, so the upside potential here is not that great at the moment. Perhaps more downside potential, but the market would need to breach 1185, 1170, and then the Tenkan-sen for that trend in that longer term time frame to resume back to the downside. Moving next to the bands with gold futures, and here we've seen for today's trading the market breach the middle of the bands in a fairly bullish manner. It does suggest that there's been a change of sentiment in this market to the upside. Not strong though, we're still trading within the bands, but it suggests that there is potential for the market to trade higher and test up to that upper band, which is trading at 1213. There's likely to be some strong resistance coming in around that area at the upper band, but certainly the bullish activity up above the middle of the bands, and by the way, the middle of the bands holding a support now, does suggest that there is potential for further upside. Moving next to Nomics Oil, and here we've seen the sellers come back into the market today. The previous day's trading, the market attempted to rally to the Tenkan-sen indicator. We saw some rejection from there, but found support around that 74.95 level. But as expected today, the market once again tested exactly to the Tenkan-sen, and we saw the sellers come back in strongly, closing with very strong control, very large black body candle, and suggesting that the sellers have once again found some solid downside momentum. There is a possibility of this market trading to lower levels, strong support at 73.58, but it does seem as though the sellers are attempting to build some momentum to trade below there. That area should be watched very closely. If we break out down below there in a strong bearish manner, we could see the market trading down to the 70.76 level, and that would be in line with Nomics Oil being bearish in all three time frames by trading below each of the Ichimoku indicators, and with the Chica span supporting the bearish momentum. And looking at the bands, and still very strong bearish activity down below the lower bands suggests a very strong bearish bias in this market. Finding resistance around that lower band, being strongly rejected from there with the sellers taking control, it does suggest a possibility of the market trading to lower levels. We will be watching that low very closely, and it's possible that the market will test the previous swing low around 73.25. Moving next to wheat futures, and here we see a change of trend confirmed today. Previously we had the market in an uptrend, even though we had that black body candle form with price rejection from above the 557 level. We hadn't seen the change of trend that day. The sellers had taken very strong control of the market on that day by closing down towards the low, and also had built some downside momentum and set the market up for the change of trend, which we've seen today, with the current candle making a lower high and a lower low. Unfortunately for the sellers, however, the buyers have taken back control on this candle by closing up above the midpoint level, and it suggests that there's a possibility of a change of trend to the upside. So we should be watching very, very closely the high of the current candle, which trades at 553. Support came in around this previous swing low, about this 545 area as well. We do have a bullish market in all three timeframes, trading above each of the Ichimoku indicators, supported by the Chica span here, and it does suggest that there is a possibility of the market trading higher. If the buyers do come in and take out the high of that previous candle, or the candle that has closed today, we could easily test 557 or above. If the market does continue trending down, looking to strong support coming in around this 540 level down to the Tenkan Sen, trading at roughly about 537, 535. And with our bands here on wheat futures, we see the retracement, the very strong bullish activity up above that upper band is maintained, giving us a strong bullish bias, and this suggests that the next move is likely to be to the upside. The market testing to the upper band, being rejected from there with the buyers taking control, a real possibility of a change of trend to the upside, watching that high very closely for confirmation of it, but still also watching the upper band to act as support. And as always, if the market breaches that band and closes within the bands, it will suggest that this strong uptrend in the medium-term time frame is finished, but at the moment we're still trading up above that upper band. Moving next to corn futures, and here we see a continuation of the trend to the downside for today's trading. A fairly large black body candle, and a candle that has closed down towards the low. So the large black body denotes that the sellers have found some very strong downside momentum. The size of the black body is larger than the previous two, so it suggests that the sellers are getting stronger here, and the market closing down towards the low suggests that the sellers have taken control. Importantly, they've done that on a breakout down below the Tenkan Sen, giving us a bearish market in the short-term time frame. This suggests that there is a real possibility of the market trading to lower levels. Now, I'd expect that we'll find some very strong support around this 367 level, previous support and resistance, and also at the Kijun Sen indicator trading at 365.50. We still have a bullish market in the longer term and medium term time frames. We're trading above each of these indicators, the Ichimoku Cloud and the Kijun Sen, and that bullishness is supported by the Chica span. It does suggest that this retracement that we're seeing and the strength from the sellers in the short term time frame is likely to be only temporary, and then we're likely to see the buyers come back into the market. The problem here for the buyers is that they will need to breach the Tenkan Sen on the way back up, and that may provide some strong resistance to the market. At the moment we still have selling in the market, however, so we'll be watching these close by areas of support quite keenly. And just looking at the bands here with corn futures, and here we've seen quite some different type of trading activity that we saw with wheat. The previous day's candle looks more like what we saw with the wheat charts, with the cloud here holding support in the market, just trading around the cloud, with the band, the upper band holding as support, and the market trading just around that band. But today we've seen the market trading within the bands, suggesting that the very strong bias that we had in this market is no longer there. Now we'll be looking to the middle bands here to hold as strong support, as we saw here previously the last time we tested to within the bands. So very keen activity around here. If the sellers do come into the market and trade through the bands in a solid bearish manner, we'll be looking to the bottom band at 363.51 to hold a strong support. Now for the buyers here, if they do come back into this market, there's potential resistance at the upper band at 378.51, as we saw for today's trading. And This certainly doesn't perhaps bode well for the continuation of the trend to the upside. There's a possibility of the market transitioning from this strong uptrending phase into a downtrending phase. We have a lot of activity to go on before that occurs, but the resistance around that upper band does cause some concern. Moving next to the US 30-year bonds, and here we see a continued sideways price action between the 141.31 level of resistance and the intermediate support at 141.06 and the 140.14 level of support. For today's trading, the buyers have come into the market fairly solidly in comparison to the recent past. Buyers attempting to build some momentum, taking control of the market, but finding resistance at the 141.31 level. Previously we've been strongly rejected from there, so we will be watching that area very closely, but also this candle has found support at the 10% indicator trading at 141.08. Also with the 141.06 previous level trading around there, it does strengthen the amount of support around that region. Now we do still have a bullish market in that short-term time frame, and with the 10% holding as support now, there is a hint here that we could be transitioning into a stronger uptrending phase in that short-term time frame. But the market will need to breach the 141.31 level of resistance in a fairly strong bullish manner to confirm that. This has been a very important area in the recent past, and a breach up above there will be significant, but no hint that that's going to occur at the moment. Now as we move into the next day or two, the market will begin interacting with the cloud that has moved up to meet where the price action currently is, and it's fairly thin. So if the sellers are strong enough, there is an opportunity here for them to change the trend in all three time frames if they can trade down through this 141.06 level. So perhaps some very important trading activity coming up over the next couple of days. Moving next to the bands with the US 30-year bonds, and here we see the squeeze going on, and as a trader this is what we want to see. It means that the market's getting ready to begin a new trending phase. Whether it be up or downside in terms of the bands, we don't know. We wait for the breakout and then the confirmation. But importantly, the market is trading within the bands, giving us pretty much a neutral market. The bands have squeezed up, so we'll be looking for that next move. Today, even though the buyers came into the market solidly, they found resistance at that upper band. And at the moment, this current candle is just trading around there, and the upper band is at 141.23. Support down at the lower band at 140.30. So some important trading activity coming up over the next few days. What we want to see is a breakout either to the upside or the downside in either a bullish or bearish manner, and then some strong follow through to confirm that. But at the moment I think we just need to be patient, and in the context of the Ichimoku charts, it will perhaps over the next few days provide us a clue as to the potential direction of this market. Moving next to the S&P 500 futures on the hourly charts, and here we saw, if you recall yesterday, we were watching around this area. The market was hovering around the 10% indicator. It bounced off there, sold off down through there in a bearish manner, and we saw some strong follow through to test down almost to the middle pivot point level and very close to the Kijun-sen, and then upside price rejection from there, with the Kijun-sen and Tenkan-sen holding a strong support with this strong bullish activity. The market testing through both of the pivot point resistance levels, and then now trading for today, continuing this strong activity with the market opening above the middle pivot point level. It suggests a possibility of the market trading to higher levels, but we've also opened down below the Tenkan-sen, and that suggests that we have a slightly bearish market in that short-term time frame. Looking at the angle of the Tenkan-sen, it is pointing up sharply, reflecting solid upside momentum, and does suggest that we could see the buyers come back into the market and trade to higher levels. We could see the buyers, however, find resistance around the Tenkan-sen, trading at 20.50, and that will be an important event if the market does trade through to there. But if we break out to the upside up above that Tenkan-sen in a bullish manner, we could quickly see the market trading to the first pivot point resistance level at 2056. We'll also be watching the middle pivot point level to hold a strong support, as well as the Kijun-sen trading around the 2044 level. We do have quite a strongly bullish market in that longer term time frame still, by trading well up above the Ichimoku cloud, but looking a little overextended in the depth away from it. And we are seeing price action retrace, as we've seen at the end of today's session and into the beginning of the new session. So if we do breach that Kijun-sen support and the middle pivot point level, we could see the market test all the way down to the first pivot point support level around the 203.8 level. But the market would still, even if we do find support around that area, it would still remain bullish in that longer term time frame. And that's probably what is needed for the market at the moment, to come and find some or mean revert back towards the equilibrium of the Ichimoku cloud, to give us a more robust market in terms of that longer term time frame. But at the moment, with this depth of price activity away from the cloud, we are just looking a little overextended.